All right. We are back with more housing market data. We have an article here out of Redfin. This is the weekly housing market update, and it will be the last market update that we see for 2023 as we go into the new year. And Redfin here, based on the data that we're starting to see, is indicating that home buying demand is showing signs, early signs of a rebound following weeks of declining mortgage rates and increasing listings. Now, this is starting to bring house hunters, potential home buyers off the sidelines and get them to participate here in the market. But it's nuanced because that rebound is coming from a relatively low level. So let's go ahead and jump into this data. Before we do, press that like button, consider subscribing. It helps grow and promote the channel, and I do appreciate your support. So first, let's go ahead and take a look at some of these leading indicators of home buying demand and activity. So like I mentioned, mortgage rates, they are coming down. They're sitting at their lowest level since May of 2023. The average 30-year fixed rate mortgage is sitting at about 6.61%. Now, that is up slightly year on year. This is, of course, according to Mortgage News Daily. Now, mortgage purchase applications, they're down about 1% from the week prior, but they are up 7% from the month earlier. Now, understand that even though we have seen a recent uptick in mortgage purchase applications, we're still down about 18% year on year, and that is already coming from a very, very low level. And you can see that in the Redfin Homebuyer Demand Index, we're actually down about 6% year on year there as well. So homebuyer demand has fallen. And of course, this is because homebuyers are still dealing with the affordability challenges that we're facing here in today's market. We still have elevated prices. And even though mortgage rates have fallen from the high, a 20-year high roughly of 8%, they're still sitting at 6.6%, which is high relative to where we were just a couple short years ago. All right, now let's dig into some of these charts and see exactly what's going on. We have the median sales price here for existing homes sitting at $364,250. This is up about 4.5% year on year. You can see that it was actually lower in November going into December, and now we started to see a small uptick here in home sales prices. The median asking price for newly listed homes, this is up 5.1% year on year. It's coming in at $363,484. So it's nearly sitting exactly where the median sales price is. This is probably the smallest gap or disparity we've seen between the two over the last 12 months, which could be an indication that the market is sort of finding an equilibrium here, essentially becoming more balanced. With the rates coming down, these payments have dropped here as well. The average payment on the median priced home is coming in at $2,401 per month. That's assuming a 30-year fixed rate mortgage at 6.67%. Now, these mortgage payments are still up about 7.3% year on year. However, today's average mortgage payment is down about $330 from the peaks that we saw in October when rates touched 8%. Pending home sales, they are down about 4% year on year, just marginally lower than where we were last year at the same time. But this is, in fact, the lowest level that we've seen over the last 4 years. Of course, this has to do with the affordability challenges, and it has to do with the lack of inventory. But on the positive note, we are finally starting to see more listings hit the market. In fact, we've seen double-digit year-over-year gain there. New listings are up about 12%, but you can see they're falling from relatively low levels. And the number of listings is still sitting far below what we saw in 2020 and 2021. Now, even though we've seen a rather sizable percentage increase in the amount of new listings hitting the market, they are coming from a relatively low level. So with the new inventory coming online, we're now sitting at about 3.6 months worth of supply or available inventory on the market. This is actually down from what we saw in November, which was about 4 months. And so the inventory levels are still relatively low. Anything 3 months worth of supply or less is generally what we would consider a strong seller's market. 4 to 6 months is going to be more balanced, and then anything over 6 months would be more of your buyer's market. The median days on market in the most recent months has increased marginally. We're at about 39 days. This is actually down year on year, meaning that the homes that hit the market, they're still selling relatively quickly. We're talking under 6 weeks in most cases here. And at the moment, we're seeing 1 in 4 homes, 25%, sell above their list price. And then we are seeing roughly 5% of all listings are starting to take price cuts. This level is down. We were at about 6.5% back in November, and the number of listings taking price adjustments are going down. It's an indication that buyer demand is starting to come back into the market. And just a little bit of anecdotal evidence from what I'm starting to see here in the Sacramento market, it is rather bifurcated, if you will. On the one hand, we're seeing some listings sit, and generally there's a reason. Maybe there's some issue with the property, or it's unappealing in some way. Maybe it backs up to a super busy road, or it's not priced correctly, or maybe the seller is not flexible with their terms, or something along those lines. But those listings are essentially sitting, and they're sitting for weeks on end. It's sometimes months in certain circumstances. And then on the other side of the coin there, the ones that show really well, that are very desirable in specific areas, they are a lot of times selling for over the ask price. And it's just an indication that buyer demand is coming back in now that mortgage rates have started to come down. I'd love to hear from you. What are you starting to see in your market? Where do you think we're going to be going into 2024? Are things going to cool down? Are they going to heat up? You think rates are going to go lower? Leave a comment below. And that is going to wrap up today's video. If you haven't done so already, press that like button, consider subscribing. We'll see you on the next video. Thank you so much. Take care.